If you are in any part of Africa looking for any means to invest and grow your money, never consider fixed deposit or treasury bill. Pay attention. Recent research has proven that if you sign up for a purpose-driven conference, you are 90% closer to a powerful consciousness. Treasury bill is a capital instrument used by the government to mobilize funds from investors or individuals to fund urgent government projects. In a layman's language, we could say it is when citizens lend out their monies to the government in exchange of interest. Fixed deposit is also a capital instrument used by commercial banks to raise funds from individuals and groups for investment purposes, but with a promise of interest in return. So while individual banks control fixed deposits but regulated by the central bank controls treasury bills on behalf of the government. Because of government's over-reliance on treasury bill to offset crucial expenditures, and fixed deposit being one of the major sources of funding for many commercial banks, they will do everything possible to protect them, which means that these two investment packages seem very safe to enter in most parts of Africa. But here's the problem. You see, the reason for interest rate on treasury bill and fixed deposit is not for profit making, but to compensate the inflation your money would have incurred while it stayed with the bank over the investment period. Let's assume that you kept 5,000 Ghana cedis with the bank for 6 months. Due to inflation, your 5,000 Ghana cedis will not be able to buy what you could have bought 6 months ago, and that is inflation. So for the banks to compensate that loss of purchasing power on your money is the reason why they offer you some interest on your investment, not because they want you to make profit. This means that anytime inflation rates go beyond interest rates, you are rather losing your money in treasury bill or fixed deposit, because even though your money would have increased in terms of nominal value after the investment period, it would have lost more purchasing power and not able to buy what you could have bought few months ago before the investment. Unfortunately, you and I are very much aware that the African economy suffers very high inflation rates every now and then, and there's a higher chance that inflation rates will always go beyond interest rates, which makes it very difficult to realize a practical growth in your money if put in treasury bill or fixed deposit for months. Listen to me. I have told you countless times that the only way to grow your money, to liberate yourself, is to invest in yourself to attract more money, or invest in a business of product or service hoping that it works. Only put your money in treasury bill or fixed deposit if you are not sure of what to do with the money yet. And don't ever give yourself the impression that the banks will help grow your money through treasury bill or fixed deposit. As a matter of fact, not a single form of capital investment with the banks is made to liberate you, because all these capital instruments with the banks are purposely used to raise funds for their own investments and projects, and they are only safe to keep your money for a while, not to use them as a money growing instrument. And if you don't get this as quick as possible, you will be working very hard for banks and financial institutions your entire life and have nothing to write home about.